Well, Nikhil, we like to just jump right into things, and we're right at that right now. So, welcome to Supporters Fund Ask an Angel. I'm your host, Jeffery Potvin. Let's welcome our investor for today, Nikhil. Thank you very much for joining us.
Oh, thank you, Jeffrey, for inviting me today. It's an honor and a pleasure. I've seen you working from when the fund was that small. Or maybe there wasn't even a fund. We were just members. I met you. I used to meet you at York Angels, and I think from that seed, no pun intended, it has become a big tree. It seems, right? So congratulations to you and your team. Hard work.
Thank you. Yeah, we do love what we do, so it makes a big difference.
Absolutely. There's nothing like something that you love to work for, right?
Agreed. Gets you going every day.
Yeah.
Well, I'm glad that we're able to connect and chat. And I know we've had many conversations today. We're going to have one a lot more specific around early stage investing in debt and all these good things. But before we jump into that, I'm hoping you can give us a little bit of a background on yourself, kind of where you've come from running operations through Russian companies all the way through to where you've been for the last 9 years. I think it's been 9 years. Feels like it's been 9 years at R&D. So
yeah.
I'll turn it over to you to kind
of. Where did you get this Russian operations? I omitted that from a LinkedIn profile, but you got it. Well, to be honest, after I did my MBA in India, I had this opportunity to move to Russia. And I was very young. It was a fantastic opportunity. And I jumped on that. I said, listen, if I don't take this opportunity right now, it's now or never, right? So, and Russia at that time was opening up. This was 95, 96. So I'm aging myself out there. A young person just out of my MBA, and I take this opportunity to work with Cadbury's. So I hop on this plane, go to Russia, take this opportunity, work in this exciting growing market in Moscow and other parts of Russia. So I worked with Cadbury's for a couple of years, and then later on I jumped and started working with Levi's Strauss with the jeans company. I worked there for another 5-6 years, and that made me travel. That gave me an opportunity to travel all over Europe and see each and every part of Russia. So I traveled to Vladivostok, which is on this side of near Japan, to Kaliningrad, which is near Sweden, and all the Baltics, and up in Murmansk, which just meets Norway, Sweden, and Russia meets together. So fantastic stuff. I was involved in development of the products, sales of those products, and it was a fantastic opportunity. I mean, a young person couldn't ask for more, right? And that gave me an opportunity to learn different languages. I'm very fluent in Russian, and that gave me the opportunity to learn a lot of languages. So even when I traveled to Europe, I'm more or less okay, right? So after that, we decided, me and along with my wife, we decided to immigrate to Russia, to Canada, sorry. And that's how I came out here in Canada. And I think this was the best step that we ever took as a family, right? So my wife started on this path to become a doctor. She became a naturopathic doctor. And I was involved in sales for the next 5-6 years. Worked with Staples, Acklands Granger, and Yellow Pages. And then I decided, listen, it's funny why I got in finance, okay? When I was doing my MBA, I didn't get good grades in my finance subjects. And I thought that I was strong in finance, and yet I didn't get good grades. So I wanted to take a revenge on those professors. And that's why I did my CPA. I said, I love finance. So I did my CPA, and that's how and as part of my project, I was involved with R&D Capital, which is the company that I've worked for right now for the last 8 years now. And they are the ones who signed off on my CPA. So I'm ever thankful to them. Somebody has to sign off on that. You have the requisite work experience and everything, right? And I've been there with them for the last 8 years. Fantastic journey. as you know, R&D Capital, it's one of the biggest companies doing straight financing. We structure 250 deals a year. And so that has been a journey from, I should have told you that I was an engineer by training. So there was a slight engineering bent of mind always. And then into sales, speaking different languages, and then CPA and finance. So that worked out pretty well when you're working with companies, right? You understand the technical aspect as well as the financial aspects of the company. So that has been a journey, in short.
It's amazing. And I'm not sure it's a short journey. I think you've got a lot more to go, and that's pretty exciting on what you've accomplished to date.
Oh, thank you. There's more to accomplish as we move forward. There's so much things happening. As you know, Jeffrey, it's we live in exciting times. There's so much to accomplish, so much to do. Some people, in the sense, despite the pandemic, I should say, despite the sad news we have, despite the fact that we are locked in homes for so long a time, I think we can look at the future with a level of optimism. Always believe that there's always a silver lining in the dark clouds that are always there, right? So
I like it. It's fantastic, and optimism is the best way to go.
You die without optimism, they say.
I agree. So I want to, before I have to ask this question, just because I ask it in every instance of the events and the talks that we do have, what is one thing about you that nobody would know? After all the things you've shared, what's one thing about you no one would know?
Yeah, my love for quantum mechanics.
All right.
Yeah, nobody would know that, but I don't understand it, and yet that's most of the time. If I have some time that I need to spend, I spend on that, trying to learn as much as possible about quantum theory and quantum mechanics. But I can tell you something. I don't understand even after going through it, spending so many hours. So don't ask me what it is and how it works and everything. It's just that I think I love it, and yet I don't understand it.
All right. Well, I'll hold the questions off on quantum mechanics then till later time, but I'm also a fan, so I can understand why you like it. There is so many interesting parts to it, from whole computing, speed, power, everything else that can go into this space. It's absolutely amazing.
Yeah. And I have a few books out here. The one by Einstein is one of the best books that is there. Obviously talks about Einstein and discovery of E is equal to mc square. But I love quantum mechanics. But anyway, go ahead. Sorry.
I like it. That's a good thing. It's good. Passion is good. Well, we can go back a little bit into your background, and because I think it's quite fascinating that you've worked in such a broad market, which being Russia, especially, and it's an opening market, and how much it's changed. And I always like to look back at the things that we've done in our past that help shape our future. And you got into finance, you got into being a CPA, and all of those things came from all the experiences that you have had over time. And I like that, you're going back against your teachers and you're proving them wrong. I think we're very similar. When I was going through finance in high school, couldn't stand it, got into university, and it just was easy. So I did it and did well. And I was like, this is kind of interesting. And maybe I just didn't apply myself, but it's amazing how much the world works off of this. But when you go back into the Russia times, I'm sure there's a million stories. I'm super intrigued. I know that back in the 80s, everybody wanted Levi Strauss pants, jeans. They were all about the denim. But you're obviously, that's before your time in this area. But when you were in Russia, what were the things that really caught your eye on this new emerging market? And what were you having to do to compete, but also to get the attention of the buyers? Because this is a pretty big segment. It's a country that's opening up, and I'm sure they weren't just peppering money everywhere. So what kind of were the things that you had to do to kind of really get yourself invested? You learned the language, which is huge. So you really went above and beyond.
Yeah, I think to start, we were working with with distributors and dealers, and they were speaking only Russian, and I had a translator with me, and I know that sometimes she didn't translate it as well. I could feel it, so I said that I think I gotta learn this language right away, right? So I took it upon myself. I didn't have a teacher. I just watched a lot of TV and tried talking to people all the time. So that's how I learned the language. I think understanding the nuances in a country which is different from where you come from is very important to build up those relationships, and that helped a lot. So that's one thing. Russia, as you know, had always had special liking to Levi Strauss because it being a rebel brand, right? So from that perspective, the brand people were very much aware of the brand at that point in time in Russia. I mean, you could talk to anybody, and it was sold as a premium. So if you go to Finland, or if you go to Sweden, or you go to any of the other European countries, the jeans that used to sell at $55, Levi's Russia would sell it at $85 because of the premium of the brand. So I think the challenge was around when it came to Russian market is because how the Russian market was evolving, right? So initially there was no concept of branded stores, right? And so we had to come in and educate the dealers and distributors on the concept of branded stores, right? So we had a contract with the Swedish company. They used to bring the whole their own concept, the Levi's concept, and they started building those stores. So that was one. Second was around merchandising. Merchandising was a challenging thing in that part of the world at that time. When working with Cadbury's, I remember they used to put the bars upside down when you couldn't see it, because it didn't really matter in the Soviet times whether you put it like this or like that, right? So merchandising was another challenge that's something that we overcome. The third was the evolving regulations around space, rules, what you can do and cannot do, where you can sell and you cannot sell. There was a lot of, one of the things that you have to, which I take from that, is dealing with uncertainty on almost a daily basis, right? There were so many uncertain things. You could sell this here, you cannot sell it here. You can sell at this price, you cannot sell at this price. The dealer will work with you, the dealer will not work with you. Here's a mafia involved, here's no mafia involved, you cannot sell. So the level of uncertainty that is there, and you almost had to deal on a day-to-day basis, right? And that is something that helped me a lot in terms of navigating an unstructured environment. And plus add to the fact that you always had language challenges all over the place, right? So that is something, so that is that, which is essentially navigating an uncertain environment, navigating a new environment, right? With very less information that you may have about the situation, and yet coming at the end of the process with the level of success, both in terms of branding, in terms of merchandising, in terms of sales, and all those kind of things. I think this is something that I definitely carried over, and the fact that you're dealing with different people all the time, your ability to deal with different types of people, because I interacting not only with the Russians, but the Swedish, the Hungarians. Our office was in Brussels. My office initially for the Moscow region was in Switzerland. So dealing with the whole sort of people with different backgrounds, different way they come at different problems, solve the problems, kind of thing, and to work collaboratively and yet produce some results at the end of the day is something that that experience definitely helped me a lot.
And it sounds like you'd be going in there into an environment that is just opening up again. You're taking all of the ways that they're doing and conducting business, like you mentioned, mafia and other things. So you're actually trying to learn that process, which is, how can I sell into you? How can I get you interested in my brand? and they're just putting roadblocks up after roadblocks because they're protecting their own domain while making sure that they're making money. So I'm sure there's a lot of nuances. And then you're coming in from other cultures as well. You're not just coming in from, say, a Canadian perspective. You're coming in from a Sweden side, Denmark, like whatever the angles are. So you're almost fighting a million battles just to get them to have a conversation.
Absolutely. And you'd be surprised if you sit in a meeting where you have teams of Polish, Hungarian, Swedish, British, and some French people working for an American company, the amount of jokes that fly around and the amount of
I'm already thinking of a million. But yeah, I'm sure
you can't believe that. Yeah. Like, I came from India. Of course, I was not Canadian. Came from India, so I used to sit at a corner and they used to just barb at each other all the time. It was it's crazy, but it also helps you understand where they're coming from, how they're coming from, and adjust your message and adjust your message and how you work with them. You're right. Instead, you gotta have a very nuanced approach to working with all these people.
And I think learning that new language would also have helped you on the sales side because people would see that you were trying, so they'd feel more interested in what you were doing because you 100%. Actually made an effort, right?
You're bang on that. The very fact that I tried when I first, so to tell you, I was talking to a distributor and I was talking to him on the phone, and I said something in Russian, which in my pronunciation sounded like a 4-letter word. Everybody looked back, and when I talked to the distributor, he said, when I talked to him later, hey, listen, I said something that sounded like really bad. I said, no. The fact that you tried is everything, right? Not many people try that, right? Not people even want to do that at that point in time. So yes, you're right in the sense that the fact that you try and try to come from their point of view and try to understand them is a big plus. It is a big plus.
No, I can see that even when I'm traveling through, if I know I'm going into a certain country where the language is different, I'll try to rehearse and practice as much as I can, as much as I feel awkward saying it because I know it's coming out wrong. Yeah. I think people appreciate that, and they'll probably change into English and try to help you as best as they can. And it's a good way to communicate, and I think it puts you in the right stage and the right foot forward. So kudos for learning that. Now you take that and you're shifting your way through, and you decide to come back. I believe it was to the U.S. before you came to Canada. Is that
I came to Canada from Russia. No, I didn't go to U.S. I came to Canada because.
Was it a U.S. company you worked for?
When I first came out here, no, I didn't work for U.S. company. I worked for, once I came back here, I worked for, some odd jobs like any other immigrant at that point in time. And then I joined a small office supplies company called Office Central here in Richmond Hill in Markham.
Oh, okay.
Which is now a huge company now. But I joined a small company, and that gave me a jump into Staples. I was managing GTA at that point in time. And later on, I went to Acklands Granger, which is another Canadian company, which is now Granger bought by Granger in the US, but yeah.
Oh, okay, Granger, that's the one, the US-based one. Yeah, okay, very cool. Awesome. So when you shifted into the Canadian domain, I'm assuming that the Canadian side might have been a few years a little bit more advanced, but now taking all this experience, all these things that you've gained, you work through Staples, you're working your business along. When did you start getting interested in startups? And did that come when you started working in the finance CPA debt side? Was that kind of the shift that started to get that startup flair or bug, or when did that kind of happen?
Yeah, it's an interesting story. So I joined R&D Capital, and that obviously we do shred financing, which means that obviously most of them are startups that avail of the shred financing. But I wasn't so in a years, it was not until I was in Mars, and you have Rudy. There was a small small, I think a talk about angel investing or angel investors. Rudy was there, right? He was on the panel. I was sitting in the front, right? And I was listening to him. And at the end, he just came. I just talked to him a little bit about, asking angel investor, what is it, this, that, all this kind of stuff. He gave me a card, says York Angel, says, come and see me. We have a meeting this Thursday or Friday. I don't remember whether it was Thursday or Friday. And took upon myself, because I was living in the market at the time. I took upon myself to just go and check what it is, right? And I went to the first meeting. There were, there were a handful of people. It was not as big in 2015 or 2014, if I'm not mistaken. The number of members were very limited at the time. I liked what I saw. I liked the people that I was meeting. We had common interest, both otherwise and business-wise, right? I mean, we spoke a common language. Everybody was interested in the startup doing well. There was this commonality around, and that interested me a lot, and that piqued my interest. Okay, but I didn't jump on the angel investing bandwagon right away. Didn't yet. Right, it took me at least a year after meeting all those people within our group, and also financing a lot of companies through my day job. That I said, this is fantastic. I'm doing my business, right? And you meet such smart people, the founders. You come across such exciting ideas. You come across folks who have made a lot of money and interested in taking that part of the money that they've made and investing into society. To a certain extent, that was amazing. That was amazing. It hits you on a different level, right? In different layers. You have people investing because they have earned money, they want to give back to society. Then you meet very intelligent people, both on investor side as well as founder side. And you have network and connections, right? And that got me really interested into angel investing. And I started my path to angel investing through York Angels.
I love it. I'm a big fan of York Angels as well. I'm a member along with yourself. And but yeah, I'm sure we could kick some crazy stories of different events and different angels I've pitched over the last 10, 15 years, been around them. And I do find that when you find that group that you fit in or that you can have common ground with and share stories and feel part of, it makes a big difference, because you all are looking at, can I make an investment in this company? And it's collectively all having that same desire and goals. Yeah. And I do think that makes a big difference in that investment community versus being yourself trying to decide if it's a good fit.
Absolutely. You're 100% right on that. 100% right on that. And of all the things, I believe that of all the things that you can do with angel investing, one of the things that really motivates me, if I have earned some money, I have some net worth, part of the net worth, I can give it back to the society, and especially as an immigrant. Coming to this country has been so good to us, to our family. Amazingly good. And you have that thing within yourself that if I'm in a position to give back to society, I should and I must. And even if it's a small percentage of that, right? And that gives you a lot of satisfaction to do something to the society. If not in any other way, at least this way, you can contribute to something that the country has given back to me since I came to this country, right? I think that feeling is fantastic.
And that's a great approach. And I'm happy to hear that you feel that same value towards the country, but also towards the future of creating more jobs, more opportunities, and the growth of the country. This is my country. My kid lives here. My wife lives here. They're gonna live here, for generations, right? And we have to create prosperity for them so that they can be as prosperous as we are. So
And it's not just because of my son. That's a metaphor. I mean to say that everybody who lives in society should be as prosperous as we are, right? We have to contribute to that prosperity. And this is if there is one thing that has created wealth in every advanced society, it's entrepreneurship. There is nothing else that has created so much wealth as entrepreneurship. And I think we should absolutely encourage that.
Wholeheartedly agree. 97% of most economies are made up of small enterprise companies, and the more help they can get, the better off they are. So as a continued cheerleader of the space, I do agree. And I think that I might soundbite what you just said and push that out everywhere, because everybody should find a way in any format to give back and help other people get off the ground, because in today's world, every little bit helps. And it really does create a nice balance for society when people are helping each other.
Absolutely. And entrepreneurship is such a difficult job. It's not a job though, but I'm just trying to describe it. It's a difficult thing. It's not easy unless you have this passion and focus and that relentless drive. You can't do entrepreneurship unless you have those things, right? And you have to be that positive stuff to help them out there, right?
I agree. I love that. And to go on that, now you're working inside of a capitalized business. Can you explain and share a little bit more about how the debt side works? Because most investors obviously take an approach by going in equity. They're doing convertible notes, which is debt. But wait a second, how does that all work? Because I think that's what people are looking for. Is they're thinking to myself, hey, I want a piece of your company. I'm going to give you some cash. You're going to give me some common shares, some equity. But then there's this whole debt side. Yeah. So maybe we can start with just the most basic format of it. You guys are doing a specific format of debt. Maybe share a little bit about that, and we can kind of patch the story together to give people a better idea of what types of opportunities are out there.
Yeah. So let me first say that if you're an entrepreneur and if you're in a highly risky business, and I always start extremely highly risky business, equity is your best option. All right. Always. All right. Highly risky business. That's something that I underlined, right? Because when my wife started a business, I lent her $15,000 in debt, right? But that's a business we know that had a certain horizon for cash flow, and therefore it could be repaid back, kind of thing, right? So the debt market is, as you know, is probably 10 to 15 times larger than equity market worldwide. Right, it's one of the most creative, diversified market that there is, right? But it serves, and the variety of debt that is available in the market is just huge, right? You could have debt that just finances your shop floor, your merchandising, right? Your purchase orders, your account receivables. There's a whole variety. And what we focus on as a company, R&D Capital, is one very specific, which is SHRED tax credit financing, or you can say tax credit financing. As you know, R&D tax credits in Canada is probably one of the best programs that there is, insofar as incentives for startup is concerned, right? For every dollar, at least in the province of Ontario, you get 55 cents back on an average, give and take here and there. In Quebec, it's much higher. And what it does is that it does take time to get that money back, right? I'll put it very simply. It does take time to get that money back from the government, right? So if you have invested if you're supposed to get $100,000 back from the government, it's going to take 6 to 8 months, maybe in a year, to get the money back. We'll give you the money now, right away, and take the money back when it comes back from the government, right? So what it actually does is that for an organization that's growing very fast, they require cash all the time. Instead of it being frozen on their balance sheet for the next 8-10 months, we'll give the money right now. You can use that for a variety of purposes. You can use it for patent filing. You can use it for sales and marketing. You can use it for set up an office, or expansion in the US, China, what have you, right? So there's a whole lot of variety of use for that you can use strategically and tactically, there are folks, when the shred credit is very, very high, use it for buying some small companies. So you can also use it for acquisition, small equity hires, right? Kind of thing, the 2% shop, 3% shops you can have. So that's what we do. It's a time arbitrage of a tax credit. That's about it, right? But it serves a very important purpose. Today, if you look at the shred tax credit, it's a $4 billion line item on a federal budget, right? And I may be off here, but something like, I think 20-25% of that amount is refundable tax credit, which means that you actually get a check back from the government. So there are two types of tax credits. One is refundable, other is non-refundable. Non-refundable is adjusted with your future tax liability. Okay. As you start making money, that's when your tax liability goes down. The one that we are concerned about is refundable, where you actually get a check back from the government, right? And it's around $1 billion, right? So, and imagine $1 billion being delayed by 6 to 8 months. That creates a huge opportunity for people to use that money and put that into different for different uses, right? So yeah, that's what we do. And
is it a payment, all one-time payment at the end? So you get to use the capital right away. You give them the full 100,000, and then in 8 months they pay you the full 100,000 with a percentage of interest.
Yeah, exactly. So you get the money, $100,000, and then at the end of 6, 7, 8 months, we get the check back, and we adjust the interest and everything else. The cool part of what we do, Jeff, out here is that not only we give shred credit based on what they have already expended, we can also look forward and say, what's going to be your projection for the next year? And we'll give you a percentage of that too. So for example, last year you spent $100,000, you had $100,000 shred tax credit. Next year is going to be $100,000. We can combine that too, right? And give you that extra working capital to work on, right? Up to a maximum of 150%. So what it does is that it gives you a whole bunch of capital, which you can then invest into R&D, whatever you want, right? And that can be a good working capital strategy.
And now the companies that you guys are tending to put this capital into by tax credits, what are the types of companies that you look for? Are they service-based companies? Are they CPG companies or product companies? Are they software companies? Or are they all of them?
All of them. And it's funny. So you have high-tech companies that are doing quantum computing that we just financed. We just financed a company that does chip design. Very innovative. Series B is at $100 million. Very innovative. You could design chip sitting anywhere in the world, chip design. On the other hand, I have financed bakers that are developing new varieties of cakes, and that is also shred eligible in certain cases. So it's agnostic. As long as you meet the criteria for shred, SRED, we will finance you. And the best part of what we do is that the financing is very easy, no personal guarantees, and we can turn around this financing within 7 to 15 days. So that's what makes it very attractive. Instead of raising $100,000 or $200, $300, $400 going to wherever they want to go to and raise it, which is going to take some time, you could raise this amount very quickly, get this money, and then go on with your raising whatever you want to raise from the banks, from your Series A, Seed Plus, whatever, what have you, right? So it's a very easy way to get that money quickly and put it into action.
I like that. It sounds like a very exciting opportunity and model to get into and work with lots of great companies.
Absolutely. And that gives us, so on the other side, it gives us exposure to a whole lot of companies coast to coast. And that gives you a very good overview of what's happening within the space. And that makes, and again, it just connects back to angel investing so well. You come to know exactly what's happening, which space is getting funded, which space is not getting funded, what's a long-term view, what's not a long-term view, and all this kind of stuff. It's fun. It's fun.
I love it. Now, can we share a little bit about just briefly some statistics around the debt financing side and the success rate or the default rates, just to give us an idea of the safety measures that are taken in order to make these? You guys do 250 a year. Does that mean that 249 and a half are successful in work, or does that number drop by 10%? Where does that average, industry average? Because I think I read that you guys do a lot better than the industry average, which means you take all these experiences you guys have had, compile them into a nice matrix that then lets you decide which companies work best, and boom, you go at it. So where does those numbers sit?
Yeah, so that's you typically budget for 5% in your P&L, but we have been pretty good in terms of working with companies and making sure that risks are mitigated on both sides, right? So we have seen rates as low as 1% on a practical basis on our side, and sometimes it goes up a little bit. Sometimes it's not a function of however you try to mitigate that risk. If the CRA comes back heavily on that particular client for whatever reason, right? I'm not saying CRA is wrong here or whatever. You can't do much about it, right? So that has to be factored in, but it could range anywhere from 1% to 5%, depending on the year, the circumstances, the client. But we have been lucky in terms of making sure that ours is, I don't know the exact number what it is, but it seems that we do much better than industry average. 5% is the industry average.
I love it. Can you give us 5 things that really you look for when defining out a company to make a debt investment into?
Well, I think first of all, I think that's a good question, and that might get me into an hour of talking about that. I think should have a sustainable cash flow, right? So that is an important thing. Second, I think it should have good management. That is critical. Third is that you look at the history and make sure that, they say that leopard rarely ever change the spots. Okay. So you have to look at what were the spots in the past, and you know that the spots are going to remain the same. So you got to make sure that you know what the spots are, right? So that is that. You got to look at what is the growth rate within that firm, right? And how is that growth rate being managed? And one of the things that I look is the structure of the company. How is the company structured? And I place a lot of importance on having a CFO within the company. If there is a CFO in the company, the instances of default rate statistically and related to, I don't know about others, but for us has been low. Well, so there are 2 things. So another thing is that if they have a board member, operating board, right, and a CFO, your default rate will sort of go down a little bit. You can make it why that would be the case, because there is an oversight from the board side, right?
More governance.
Obviously, assuming that the board itself is not out to lunch kind of thing, right? So you have a board, a good governance, and then you have a CFO who has a knowledge of the numbers and who's feeding that numbers to the CEO so that he or she can take, or that person can actually take better decisions, right?
I love it. No, that's awesome. Well, I think we've got a good understanding of how the debt vehicles and the process works and the success rates and how you guys go and approach this. Is there a minimum and a maximum that you have or you work with when it comes to debt on tax credits? Like, is it a minimum 50,000 and the maximum is 2 million, or can the maximum go higher? And
yeah, we work from $75,000 to a couple of $1 million. The $2 million mark, high water mark, is a natural high water mark for the simple reason that beyond that, any shred becomes non-refundable, which means that you actually don't get a check. It gets adjusted in your future tax liability, right? So that's a natural. So from $75,000 to a couple of $1 million is what we can do. But in certain cases, when we had companies that had $1.5 million last year, and then they're projected for $1.5 million next year, we would combine that and make that as packet for $3 million. So we have gone beyond $2 million, but those instances are very, very rare. Most of the time is between those numbers.
I love it. All right, we're going to kind of shift now a little bit into a question that I have for you, which is, in the last 8 years that you've been working the debt side and investing in early stage companies, have you come across any story that really stands out to you that just wowed you, that you couldn't believe this entrepreneur really crushed it, that she or he was able to like overcome all these barriers? You guys gave them money and they just took off like a rocket ship. Any real cool story that you can share with us?
Absolutely. So as you know, when it comes to entrepreneurship, it's never a linear line. You get money, you just fly off, you crush all the time. And, that only you come to know when the company is successful, that that people are crushing it. But it's a hard route, right? And it's not linear. It's ups and downs, a lot of stuff. So we had this company out of Winnipeg that it was a bold concept that they were doing. And they had a lot of struggles in the first year. We financed a small portion that went to pay their payroll just in time. Second year, very, very grueling. Again, we just provided the money in the nick of time so that he can do the payroll, and he did it. And okay, good, right? Now we are in 2020. Sales are less than $1 million. Struggling, cost high, development cost high. Bottom line looks very, very bad moving into that. So he comes again and say, listen, we need this money. Can you? And we look at all the criteria and said, based on the criteria, we cannot, right? But then we had a discussion, listen, this is what the path looks like. This is how it looks like. This is what technology we are adding. And this is the interest and all this kind of stuff. And I said, and we had this internal discussion and we said, let's take a bet on this guy, right? How much you're going to lose and how much you're going to win. And you do that asymmetric analysis and come to a conclusion, it's worth taking that bet. And we gave him a certain amount of money that added to the working capital. This is around February, March, and then comes pandemic. And so everybody at that point in time didn't know what to do, right? And the entrepreneur was pretty smart. He took that money from us. He got money from other institutions, a little bit of money here and there, got around a couple of $1 million together. And then through his contacts and through his technology and through the kind of people that he had hired, he moved that company from $1 million to $16 million by the end of the year, right? When I saw he said, we require them to report every 6 months kind of thing. And when he sent me the report, I said, his name is Jeff. Jeff, there is an error I think there's an error. It should be 1.6. No, it's $16 million. right? So, and then at the end of the year, he came back and said, listen, and he told me that, listen, without your help, this wouldn't have been possible. That small working capital, maybe it was around $300,000, $400,000 of working capital that give, helped him to buy stocks during the pandemic times. And that he rotated the stock so fast, right? That his company took off from $1 million to 16 by the end of 2020. And they are now on to $40 million by the end of this year. And I think I won't be surprised if these guys go an IPO in a short period of time, right? Amazing. So this is a fantastic story where a small help from our side, and with this person's grit, vision, understanding, and taking advantage of the opportunity, converted that $1 million into 60, into 40, and now most probably a company that will go will IPO or will have some kind of big exit, right? So, and this guy, I remember, he used to present to the VCs and everything. He was turned on like there is no tomorrow, right? And not that the VCs were wrong or there has to be a match. But what I'm saying is that you have to have that grit, and you have to have that vision, and you have to have that ability to street smart to take advantage of the opportunities out there, and also make sure that every kind of capital should be part of your capital stack, right? Not saying, hey, I only want equity, or I only want this, or only want that, right? So you should be smart enough to understand what kind of capital should be in your capital stack, so that you can take advantage of that at the right moment.
I love it.
So that's something that stands out in terms of a company that was struggling along became a rocket ship.
No, I love that. Have a vision, have some strong hustle behind you, and know how to take an opportunity and move it forward.
Yeah, absolutely.
Great story. All right, we're now going to transition into the rapid fire questions, which are going to be business and then personal.
Oh my God.
All
okay.
Right. Here we go. Favorite part of investing?
Favorite part of investing is basically contributing to society. That is a big part for me.
I like it. Number of companies you invest in per year?
I invest through syndicate. So I can't really say how much I personally invested, right? But I should say at least 4 companies a year.
Perfect. Preferred terms?
Common Class A shares.
Okay.
Everybody's the same.
Very true. Any verticals of focus?
Right now, space, DeFi, and quantum computing.
Love it. All right, now these are the real rapid fire questions. Okay. Choices. Founder or co-founder?
Founder.
Unicorn or 4-year 10 times exit?
4 times the other one that you said.
4 times 10 exit. You're a true CPA. Take the money. The unicorns are damn unicorns. I like that. Tech or CPG?
Tech.
Brand or tech?
Brand or tech? Tech.
AI or blockchain?
AI.
First time founder or 3 times founder?
3 times founder.
First money in or Series A?
First money in.
Angel or VC?
Angel.
Board seat or observer?
Board seat.
Safe or convertible note?
Safe.
Lead or follow?
Lead.
Equity or interest payments?
Equity. Coming from a debt, where my day job is debt, equity. Yes.
Well, there's a mix, right? You kind of do 2 things in the same space. So we're trying our best here to balance it out. All right, we're shifting more into the personal space now. Book or movie?
Book.
Superman or Batman?
That's a hard choice. Superman.
Pizza Pop or ice cream bar?
Pizza Pop.
5 minutes with Bezos or Oprah?
5 minutes with Bezos.
Arsenal or Man U?
I'm not a football fan. You can take Arsenal.
Done. Good choice. It's my favorite team, so I had to put it in there. Bike or rollerblades?
Bike.
Big Mac or Chicken McNuggets?
Big Mac.
Trophy or money?
Money.
Beer or wine?
Beer.
Alarm clock or mobile phone?
What a choice. Alarm clock. Let me be boring.
Hotel or hostel?
Hostel.
All right, I love it. These are fun. I keep changing them up, but I find them more interesting and ways some people answer them. I can overanalyze you now after, but this is good. You're not boring. You're past the boring line, so that's good. That's good. All right, final 3 questions. What is your favorite sports team?
I'm not a sports fan. You'll come to know that, right? So, Raptors.
Well, they're a good team. They were not last year, but the year before that, they were the best. So, all right, it's a good choice. Favorite movie, and what character would you play in the movie?
I'm not a movie buff, man. I gotta pass this.
How about I'll give you some hints because we've heard so many of them. I've heard lots of them. So they're the ones that were most common are, and people have picked off the wall stuff that I've never heard, and it's amazing. But I've got a lot of great movie selections. But things from let me see here: Star Trek, Shawshank Redemption, Star Wars, Matrix.
I'm not a movie fan. I can tell you that.
All right. We'll let that happen.
Yep.
You're not allowing me to profile you. So this is not helping me. All right. Last question. What is your favorite what is your superpower?
What's my superpower? I think to help others without expecting anything in return. Zero. Right? I think that's my superpower. I love helping people wherever I can. Whether it's jobs, whether it's finding a friend, finding a company, getting access to capital without anything in return. So that's what I love to do.
Well, I love it. So, Nikhil, thank you very much for your time today. You did a fantastic job. We learned a lot. I took lots of notes. And the way we like to end our show is we like to give you the last word, which is anything you want to say to investors or to startups. The floor is yours, but thank you again for all your time today.
Yeah. So to all the investors and investing community, I think we are at a unique inflection point in Canada. I think we should believe and trust in Canadian companies and invest wholeheartedly in supporting our entrepreneurs so that they go on to become world-class companies. That's like investing in the prosperity of our country, Canada, right? I mean, that's what I would like to say.
All right, that was fantastic, Nikhil, being able to share all of that great insight, because really at the end of the day, when we do a lot of equity investments, we don't get into the debt side. And he shared a lot of great insights around obviously the size of markets and what they do. And just the fact that there's $4 billion a year that's going into debt side of it. Absolutely incredible. And he shared his 5 things that they look for. And I love them. They're all great. Sustainable cash flow, good management, history on their financials and business, growth rate management, structure of the company. Do they have a CFO, operating board? All of those things make a big deal when you're making a debt investment. And it's the same thing when it comes to equity, but there's a lot more scrutiny on the debt side because they are working to get paid back. So a great understanding of that. And it was really great to learn a little bit more about Nikhil as well. So, they fit in that 1 to 5% on the default side, which is a pretty great standard and certainly helps drive a business forward. So very impressive and learned a lot. So at the end of the day, it was, the environment's changing, like he said, and it's great about giving back. And that's what I loved about what Nikhil was saying. It's all about being social and communal and giving back to the industry. So thank you for joining us today. If you enjoyed the conversation, please subscribe to our YouTube channel or follow us on Spotify, Apple Podcasts, or Stitcher. You can also check us out at supportersfund.com, or for startup events, visit opn.ninja. Thank you very much and have a fantastic day.